It is October 13th, Tuesday evening after the close, and I'd like to do my weekly swing trading video a day early because I still want to try and get some spreads off. I feel that we've got a window of opportunity right now. I want to make sure that our spreads expire before the election. I don't want to hold any positions over the election. I feel the risk reward is just not there. So we've got two expiration cycles. October 30th, we can still sell some premium, have those expire, be on the sidelines. We've had a tough go of it. The market has been moving higher and higher. We knew that. We haven't had a single pullback. In some instances, we've actually had the market pull back, but the stocks I've been picking are so dang strong, they are taking off on us. The good news is we're picking well. And the other good news is that you have all the tools that I'm showing you tonight at your disposal. You don't have to wait for me to show you a trade. I'm showing you the process. I'm showing you how to structure the trades. This is available to you every single night. Take 10 minutes, 15 minutes, go through the searches, structure the trade. If you want to be more aggressive than I am, you certainly can be. You've got this available to you on an ongoing basis, and if we miss the trades, the stocks are still excellent picks. You might have to go a little bit closer to the money. You might have to go an expiration date further out to get the credit that we're looking for. So please don't wait for me to hold your hand and show you these spreads. You've got everything you need to do it on your own as well. So let's take a look at the market and see what it's doing right now. You can see how we had this test of the 100-day moving average. Loved it. I also pointed out this inverted head and shoulders formation, shoulder one, the head, shoulder two, the neckline, and then we had the breakout above the neckline. I did a video Sunday night, showed you this pattern, and I also showed you a trade that many of you were able to get in on. So I'll give you instructions on that. That was the DDOG bullish put spread. I'd say in the chat room about half the people got in, about half the people didn't. So I hope that you are one of the people who did get in on it because it's been a really nice trade so far. So we knew that we had this downward sloping trend line that was breached to the upside. We also had the 50-day moving average that the market had been hovering around. Now, last week, you see this long red candle right here. That's what prompted me to do the video a week ago, Tuesday night. Donald Trump said, no more negotiations, no more stimulus bill. We're going to wait until after the election. And I thought, hot diggity. Wednesday morning, the market's going to drop. We're going to get some of these great spreads off. Didn't even last a few hours, and he came out and said, I might be willing to reconsider. Maybe there's some middle ground. By the time the market opened the next morning, the S&P futures were up over 25 points, and they never looked back. And exactly what I had told you that night played out. Doesn't matter if the stimulus bill is going to happen in the next week or two. The election is 3 weeks away. This is going to be top priority for whichever administration wins the election. This is going to be the number one thing. So if Republicans win, we can expect a $1.5 trillion package. If Democrats win, we can expect a $2.3 trillion package. The market is addicted to easy money, and it's going to get its fix very, very soon. So you might be thinking, well, gee, if that's the case, why don't we just load up on calls right now? I don't know what's going to happen after the election. A stimulus bill is great, and that may buoy the market for a little while. But if the election results are in limbo for 2 or 3 weeks, we could have some serious issues. I don't think the market's going to receive that well. I think there could be a lot of unrest and a lot of chaos. I certainly want to avoid that type of situation when it comes to selling out of the money bullish put spreads. I hope I'm wrong. I hope the election outcome is very clean cut. We know who the winner is within a day or two, and the market can do what it's going to do. So as far as I'm concerned, we could test the all-time high before the election. It certainly looks that way. We've got lots of momentum right now. We're one really good day away from testing that all-time high. Where does it go after that? I don't know. I feel that valuations are still very stretched. You got the S&P 500 trading at a current PE of 23. This quarter, Q3, profits are expected to be down 20% year over year. The second wave of the coronavirus has not helped the economic recovery, and the virus is very, very persistent. Plus, a lot of people are going to be inside now that the weather's starting to get colder, and it looks like the number of cases is on the rise again. Plus, you have Europe basically in lockdown. They've had a resurgence in the coronavirus. This is all weighing on economic conditions. I feel that good news is priced in, good news being that stimulus bill. So we still have to tread a little bit cautiously. I don't want to chase anything right now. I feel that risk and reward are fairly balanced here if you're selling out of the money bullish put spreads. But as far as going in and buying into this rally right now, I think it's a dangerous trade if you are a swing trader who can't watch the market intraday. So that's the analysis as far as the market's concerned. I think we float higher into the election for a couple of more weeks. That's what we're going to be trying to take advantage of. So let's take a look at the positions that we currently have on. And I'm going to move the screen over and I'll show you some of the different trades that we tried to get into last week. We are in our Abbott position. So we sold an out of the money bullish put spread on Abbott. We sold the 104 puts and bought the 103 puts. We did that for a 20-cent credit. That's in nice shape. We also bought the October 23 110 calls on Abbott, and we sold the October 16 115 calls for $2.70. That part of the trade, it's not doing that great. We'll take a look at Abbott right now, and I'll move this off screen. Abbott has been floundering around. It had a really nice head of steam yesterday, and I don't know what happened today. I know Apple announced that they're going to be getting into more healthcare types of apps on their phone, and they have a method of testing oxygen levels in your blood. Is that why the stock sold off? Gosh, I hope so, because that was a really minor news event, in my opinion. That's not a conclusive test at all. It's nothing close to what Abbott has. Plus, we already know that the government has ordered those testing kits from Abbott. Earnings are coming up. As long as the stock stays flat this week, I'm good with everything, but I do want to see it start to gain some momentum into that earnings date, which is on 10/21. So that'll be next week. So come Friday, I'd like to see this stock pushing that 110 level, probably at the 111 level, and then we'll be looking to set targets for our bullish call position, because that's all we're going to be left with is the October 110 calls expiring on October 23rd. We are going to exit this trade before earnings, as always. So I will have those instructions for you. We got to get through the week. I'll make sure that I send instructions out to you via email so that we can exit that position as best we can. We'll also set a target. So you can see that we also had TWLO, BYND, AMD, UPS. Those are all trades that we tried to get into last Tuesday. We'll take a look at each one of the stocks. And then Sunday night, I sent out this trade on DDOG, selling the October 30 98 puts and buying the 97 puts, and doing that for a 20-cent credit. So we'll take a look at all three of those, and you'll notice they are in red. It is Tuesday evening, October 13th. All of these orders should be canceled. We do not want to get filled on them now. The stocks have moved higher. If we were going to get filled on these, the stock would have to drop incredibly for us to get filled. We don't want anything to do with that. In fact, the trades that I'm going to be showing you today, you can see right here, if we're not filled by Friday, cancel the order. When you're doing very short-term bullish put spreads that expire in 2 weeks to 3 weeks, you want to get filled instantly. That's the premise, is that you're going to be able to get filled on that spread and that the stock is going to continue to move higher. And if you're not filled within the first couple of days, you got to move on. You have to keep looking. You got to keep trying to get into another spread situation. So let's take a look at the stocks that we tried to get into, and I'll bring up TWLO. Look at that baby go. Never had a chance. We needed that pullback Wednesday morning. If President Trump had just waited a couple of hours Wednesday morning before he released that tweet, I think we would have been filled because the market was really freaked out about no stimulus plan. And I think we would have had the pullback that we needed to get filled on these. Given that the market was selling off hard on Tuesday, that was the reason I did the video early. I thought this is a perfect opportunity. I do not want to miss that sell off Wednesday morning. That's exactly what we've been waiting for. Never happened. So BYND was another one that we tried to get into. And you could see how the stock has also moved much higher. Really had some power Thursday, Friday, and then today was the first day when it's actually shown some weakness. But that spread is still way out of the money and out of harm's way. AMD basically about where it was when we did the video last week. Hasn't really moved too much. We still haven't been able to get filled on that spread. I think we needed to pull right down to that 50-day moving average and maybe a little bit lower to get filled on that. UPS, another really nice one, the stock continuing to move higher. So that's what we expected it to do. So that's the good news. DDOG, you had a chance on this one Monday morning, and you can see that was the pullback right there Monday that got a lot of people filled almost back to the halfway point of that long green candle. Closed near its high of the day. Today, zoom. See you later. So if you got filled on DDOG, you've got profits in the trade. Manage the trade accordingly. Don't let it turn into a loser. We're short the $98 puts. We're long the $97 puts. Those are way down here off of that breakout right there. We want that to be preserved. But if you want to tighten up your stop, right there, the low from Monday should be your stop on a closing basis. And I'll give you a price for that. That price was 108.83. If the stock closes below that point, close out the trade. Would I hang on to it a little bit longer? Probably. I just don't want to have a lot of people calling me and asking me what they should do with the spread because it's not showing up in staged orders and because I'm not providing any updates. But I think that if you're a fairly aggressive trader, you could use that low right there from October 8, and that comes into play right around 101.81. But that's a really nice trade. If you got in, you're very fortunate. By the way, you should enter these trades Tuesday night or Wednesday morning before the open. I get people telling me all the time when they're not getting filled, and I know everybody that had a working order got filled, and then it's, well, what should I do now? Well, you probably missed the opportunity. Get the order working right away. And for many people, they want to see how the stock opens up. I can appreciate that. I understand that. But if you're waiting for the stock to show signs of support and move higher, that opportunity is already gone. We need to sell these spreads as the stock is pulling back and as the stock is falling. That's our only chance to get filled. Once it finds support and starts to move higher, the spread's not there anymore. While the stock is still moving down, the market makers are willing to sell the spread to us at the price that we want. Once that low is in and the stock starts moving the other way, they're not interested in selling it to us. So please make sure you have these orders working before the open. So let's take a look at the trades that we want to do this week and how I found them. I'm going right back into our searches and I'm going to be using the pre-earnings bull criteria, which, by the way, you can go into the buy into earnings search. If you're looking for stocks to trade, this is all you need. Look for stocks that are moving well and that have earnings coming up. All of these companies announced within the next 2 weeks. You can click through the list, look for the momentum, look for those major moving averages that the stock is moving through, look for higher volume. You can just buy the stock and hold it for a few days just into the earnings announcement. If you wanted to buy calls, you can do that. Just make sure that those calls span the earnings date, that the option expiration is after the earnings announcement date, and make sure that you exit the trade before that actual earnings announcement. But that really is more for day trading or for very, very short term swing trading. So the stock search that I used tonight, I wanted to make sure that I had decent option liquidity. So I used a value of -1 or higher. I used the pre-earnings bull search, and I wanted to make sure that we had at least a couple of option expirations. This gives us the October 30th expiration cycle, and it also gives us the 23rd expiration cycle. And I want to make sure that the stock announces within about a 3-week window. So I used November 20th as the latest date for that earnings announcement. And then weekly options, I also wanted to make sure. And then there are a whole host of other criteria that you can use. It could be using trade signal, make sure that the trade signal is bullish on a daily basis or a 4-hour or 2-hour basis. You know that I always like to have relative strength. So that's the criteria that I used on a daily basis and on a 4-hour basis. And these are the stocks that came up. All excellent candidates, and all of them look really good if I were going to short-term trade them. That's how you do the search. Then you move this off to the side, and in order to load a chart, when you have it in the search, you just double click it. Click, and that'll load the chart, which, by the way, CLX is one of the stocks that I want to do a trade on. So we'll take a look at that one first. I'm not going to knock through all of these because I'd rather spend time showing you some of the other criteria that you can use in your searches. So CLX, I like the fact that it's got this downward sloping trend line that it's been able to breach on the upside. It's had decent volume so far this week. And you can see a double bottom higher low. There's a low, there's a higher low that found support. We've got that downward sloping trend line that's been breached. We also have two major moving averages, the 50-day and the 100-day, that have been breached, and the stock was able to close above them on a weak market day. So the market was down today, but the stock wanted to move higher. And if we hover over the E, we can see that the earnings announcement date is on the 3rd of November. So we are going to be looking for an option that expires before the 3rd of November, which is also election day, by the way. So we're going to be looking at the October 30th expiration date. And I'd like to go as low as I possibly can. And in this particular case, we're looking at the 212.50 puts that we're going to be selling right here. And you can see that's 2 standard deviations away. The red line is 1 standard deviation. The blue line is 2 standard deviations. That also increases our odds for success. And on this particular trade, we're only going to be looking for a 45-cent credit. And you can see that that is splitting the current bid ask on that spread. 25 cents bid, offered at 65 cents. Could we get filled tomorrow if the stock opened right here? Probably not. We need the stock to move back just a little bit. If the stock loses $1, we'll probably have a pretty good chance of getting filled on this trade tomorrow. So let's recap this trade. We're going to be selling a bullish put spread on CLX. We're selling the October 30th expiration. The 212.50 puts are the shorts. The 210 puts are the longs. We're only looking for a 45-cent credit. We've missed a lot of these spreads. I just want to get a spread done. So maybe 45 cents gets us filled and 50 cents doesn't get us filled. Got to try and get this trade done. It's a little bit less than the 50-cent credit that I want to take in, but we only had the trade on for 2 weeks and 3 days. So not too long a term trade. So that's the first trade. The next trade that we're going to take a look at is PDD. And there you can see stock pulls back, finds support, long green candle closing on its high, gap higher, and long green candle closing on its high. We've got a doji here. You can see the stock was able to maintain all of those gains today on a weak market day. Let's put up that 5-minute chart and I'll show you what I mean. That's why the stock has a bullish hammer. So market down, stock closes here yesterday, sells off with the market initially, grinds its way back, and finishes close to the prior day's high. Put up the SPY chart, and lo and behold, there's your relative strength. Market down, 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 stock up. So there are buyers in the stock. I believe that it wants to go higher, but we're going to distance ourselves from the action, and we're going to sell an out of the money bullish put spread. So in this particular case, we're going to take a look at the earnings date, which is on the 19th of November. So we've actually got quite a bit of time on this one, but I'm not going to go out that far because I want to make sure that the options expire before the election. That puts us to October 30th. And we want to make sure that we can get as far away as we can. We have one line of support right here. We have another line of support right here. This close actually will lend support to the stock as well. And I would like to try and get halfway up this long green candle because that also should be a support level. So what we're going to do is we're going to sell the October 30th 77 puts, and we're going to buy the 76 puts. And you can see that that is almost 2 standard deviations away. And the spread here is negative 31 cents bid, offered at 75 cents. We are going to be trying to get a 20-cent credit for this because there is $1 between the strike prices. Good till cancel. And that is our spread. So let's recap. PDD. We're going to be selling the October 30th expiration, sell the 77 puts, buy the $76 puts, do that trade for a 20-cent credit. Now, there's one other thing I'd like to point out on this, and it is another variable that you can use when you're doing your searches. In this particular case, I'm using the momentum booster, and I'm wanting it to be bearish. So this is the 10P indicator, and the stock has a bullish divergence. What does that mean? That means that currently the 10P indicator has been moving lower, but the stock has been moving higher. So that to me is another reason to be in it. It tells me that the current momentum the last few days is extremely strong. So just wanted to point out another variable that you could use in your searches. Here's another variable you could use. Stock greater than prior day high. On a day like today, it's relevant. Why? Because the market was down. A stock that is up today, especially if it's above the prior day's high, has some really good momentum. Well, let's see what that yields. Hey, there's some nice stocks. And look, some of the usual suspects in here. CLX, DDOG. I looked at EA, pretty nice one. LOW, NVAX. I did a video on YouTube today that highlighted NVAX. Some of these are just way too far out of the gate, like Piton and Roku. See you later. No interest on that. Walmart looks pretty good, but I'd be more interested in day trading it. That stock tends to chop around, and I don't trust a lot of the moves as good as they look. We can take a look at that a little bit later, but this is another variable that you can use. Stock greater than prior day high. Here's another one you can use. Heavy volume. Also excellent. These are really nice stocks today. TDOC was really hot. So I could combine above prior day high with heavy volume. This would also work because I've got the pre-earnings bull. I could add ADX into this search and come up with some really nice picks. So be creative, try a number of different variables. The idea is to cast a very wide net to start with, and if you get 50 results, then you want to start drawing that net in closer and closer until you have a manageable number of, say, 10 or 12 candidates that you can click through. But keep in mind that with every box that you have marked here, your probability of success rises because you are adding more and more conditions to that trade. So let's keep looking at some of the different trades that we're going to be doing. PDD is the last one that I had mentioned. Next, we're going to be taking a look at Microsoft. So let's put Microsoft up. Microsoft has had a very good history of rallying into the number. It doesn't move a lot, so you don't get a lot in terms of option premium. But you can see here how the stock has broken through this horizontal resistance. It's above the 50-day moving average, bounced off the 100-day moving average. I believe this 215 horizontal support level is going to hold. And so what we're going to do on this particular stock is we're going to go just below it at the 212.50 level, which you can see is just above the 50-day moving average, but it's below this horizontal support, which I'm really expecting to hold. So we'll put up the option chain, we'll bring up Microsoft, and we better check that earnings date. Earnings date is the 28th of October. So that means that we're going to be selling an option that expires before that, which would be the October 23rd expiration date. And we're going to go down to the 212.50 puts, click on those, and we're going to click on the 210 puts. You can see that this is straddling the 2 standard deviation level. And you can see off screen that that spread is currently 15 cents bid offered at 56 cents. Well, we know that we'd like to get 50 cents for it, but given that it expires in a week and 3 days, we're going to need to get less. We're going to ask for less on this. We're only going to try and get 40 cents for this spread, which is still going to generate a really nice return of about 20%. Nothing wrong with that in 1 week and 3 trading days. So to recap this trade, we're going to be selling the Microsoft October 23rd 212.50 puts, buying the 210 puts, and we're going to be doing that for a credit of 40 cents. So again, love this horizontal support level now. Was resistance 1, 2, 3. Now it's support. That I am expecting to hold. In fact, I would expect the stock to float higher into the earnings announcement. The market's strong. This is one of the leading stocks. It has a great history of rallying before the earnings announcement. I feel that going below this support level gives us a very high probability of success. Now we just have to get filled on it. That's been the hard part for us. The hard part hasn't been market analysis or determining what the market's going to do. The hard part hasn't been finding the right stocks. The hard part has been getting filled on these dang spreads. And I am noticing a lot of the bid-ask spreads really widen out. And that means the market makers just aren't playing unless it's to their utmost advantage to take that spread. So let's take a look at the final one, and it's McDonald's. McDonald's also has a good history of rallying into the earnings announcement. It does not move much, so we're going to have to go close to the money. You can see this was the prior resistance. Stock broke through that resistance. Now that is support. 1, 2, 3, 4 touches. This is a pretty firm support level right here around that 225 level. We're going to go just inside it, and we're going to expect this horizontal support level right here to hold. Let's hover over the E, and you can see that earnings announcement date is 10/27. So we know that we want to sell options that expire before that date. And that leaves us with one expiration cycle, and that is the October 23rd expiration cycle. And so I'm going to scroll down, and here we're going to sell the 2250 puts. You can see that is 1 standard deviation away. That's the red line right there. We're going to buy the 220 puts, and the spread is 29-cent bid offered at 64 cents. Now we're going pretty close to the money. This one I got to get my credit for. I got to get my 50 cents on this one. So to recap the trade, we are going to be selling a bullish put spread on McDonald's. It expires October 23rd, so we're in this trade for a week and 3 days. We're going to be selling the 22.50 puts. We're going to be buying the 220s, and we're going to do that for a 50-cent credit. And I'm going to bring the staged order entry screen back up here because I want to reiterate one very important message. The new spreads, these 4 spreads that I've just shown you, if we are not filled by the close of Friday, October 16th, we are canceling those orders. I'd really like to get filled tomorrow or at very latest Thursday on the ones that expire on the 23rd. So Microsoft and McDonald's, because time is tick, tick, tick eating away at these options constantly. I really want to get filled Wednesday or Thursday on these, but we'll leave them open Friday. If I see something I do not like in the market in the next couple of days, I'll send an email. I'll tell you what we need to do with our spreads. But in general, if there's a little bit of nervous jitters and the market pulls back, these gaps higher were really powerful. And yes, some of those gaps could be filled on the SPY, and that's okay because that move was so strong. You can see gap higher. The low of the day there was higher than the high the prior day. Gap higher. The low of the day here was higher than the high of the prior day. Gap higher. The low of the day was higher than the prior day high. These are what I call true gaps. There is absolutely no overlap. That is a very, very strong move. If we do come back and fill any of these, I believe it's going to be temporary, and then we're back off to the races. The bid is strong into earnings season, and the notion that the stimulus plan is going to happen one way or the other is keeping buyers engaged. We're going to take advantage of strong support levels that we've identified on stocks that have a history of rallying into their earnings announcement. Those earnings are coming up. I like all the trades that we've got on deck. Gosh, I hope we get filled. If we don't get filled, take a look at these stocks. Try and do something short term on your own. Look at the searches that we've used. Get something on the board. Don't go gonzo, but try and generate some income right now before the election because I plan on being on the sidelines. I've got a little bit of a game plan going into the election. I've got a trade that we'll try and do the week before the election. But apart from that, I really plan on being in cash as much as possible, letting the dust settle, and then we'll know exactly what to do once we start to see the reaction and the news. Thanks so much. Have a great night, everyone. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.